Okay.
Hello, hello, hello. Welcome to the Mom Halo Show. I'm your host, Alana Kavitz, and I am so excited for who we have in studio. One of my most, honestly, this woman has taught me so much. She's so incredible. Nicole Simons is in the house. Did I do it?
Yes, it is perfect.
Okay,
Thank you.
perfect. I always butcher her name. I love this woman so much. She is my actual person that I spend all of my money with, who has all of my financial investments and helps me make my family, frankly, ensured I have generational wealth. So I cannot wait for you to meet her. Let's give her a round of applause. Welcome, Nicole. Woo.
Yay! Hi, everybody.
Hi, Nicole. Can you, I am so excited because this year you are officially a scholar with the Mom Halo, which means we get to see you all year round. But I just, for some of our listeners and fans who don't know who you are, can you just please kick us off who you are, where you're from, what you do? Go ahead.
Yeah, awesome. So my name is Nicole Simons. As Alana said, I am a licensed insurance broker and investment advisor for my family business, CPN Financial Services. I've been in the business now for, I'd say, about 12 years and definitely had my share of experiences in helping women and men as well, but I would definitely say that my majority of my client base is women, just helping them learn about investing their money and protecting what's most important to them, which typically is their family and their loved ones, and teaching people how to do that with different insurances, but majority life insurance.
Okay. Well, and I'm telling you, I'm somebody who made a very smart, I think, I'm just saying for myself, I made a smart financial decision in my 20s and bought my first condo in Toronto. Yeah, like quite a while ago, my mid 20s, and then I lived there, and then I rented it out, and then I sold it, and I came into some wealth for the first time, like actual wealth. And I called Nicole and said, "What do I do with these dollars?" And she coached me like line by line through things that I had never heard of before. And I'm happy to pay her a percentage to help me manage this because, like anything else, I outsource a lot of things that I don't know how to do. And Nicole has not only taught me, but I feel really safe with Nicole. She's a mom and she's super experienced. So we're going to talk about some really, maybe on the face of it, like a topic that seems a little bit dry, but actually with the way Nicole explains things, and we can get into a bit, I'll use myself as an example as we're sort of addressing these conversations. It's so important that we as women are financially literate and know how to manage our dollars. You know,
Absolutely.
I always say if boys can do it, girls can do it. And
Absolutely.
Nicole has been a trailblazer for me and making sure that I understand what we're doing here. So um, let's talk about how do you secure your financial fence? I don't know. How do you do it? How do you get that financial moment started? Talk to us about that first moment of having money or finding money. What's the first thing we do when we come into money or we don't have money but we're trying to save or we're trying to put away a little nest egg? Like what's the first sort of basic 101 thing to
Yeah.
do or think about?
Yeah, well, like you said, a lot of times when people come into money, they're not really familiar with what they should do with it, especially if they come from a background where family members, moms, dads also didn't have much experience. The saying the apple doesn't fall far from the tree. Sometimes that really plays a large role in how people view their own personal finances. Some might have that, ingrained mentality. Well, my mom wasn't good with money, so I'm not good with money either. But it actually doesn't have to be that way. I mean, even though you may come from a background that wasn't, financially literate, that doesn't mean that you have to be that way, especially since now where there's so many resources online, YouTube, advisors like myself that you can reach out to. There's so many resources that can help you every step of the way and guide you to make those great decisions with the money. So for someone who's just getting started and coming into money and not sure what to do, the first thing to do would be to look at all of your options, right? Look at all of your options, whether you choose to do that personally yourself alone or work with an advisor like myself that kind of knows a little bit in regards to the different investment vehicles or saving vehicles out there. But at the very least, one thing that I will say for sure is you don't want your money necessarily just sitting in cash. And what I mean by that is sometimes when we come into money, we're not necessarily ready to make a move just yet. Like Alana, when you had your money, you might have held on to it for a little while before you actually made that decision. So in
Yeah.
that interim period, a really good idea, number one, is to make sure that money is at least sitting in a high interest savings account. And by doing that, you're making sure that at the very minimum, your money is getting an excellent percentage rate. Right now, some banks are offering like up to 6% right now for a few months just to have your money just sitting there. That's 6% rate of return on your money for doing absolutely nothing. So at the very least, I would look into making sure you have money sitting in a high interest savings account before you make your move. And then once you're ready to make your move, I definitely would first assess what are the goals. Is this a short term situation where maybe you are going to need this money in the next 2 to 3 years to purchase something? Or is this money that you don't need for a long time and don't see yourself accessing this money for maybe 10 years plus? That'll really play a large role in which avenue you should go. Because if you don't need the money for a long time, investing it, which would mean you're going to place that money in the stock market of some sort, would probably be a very good idea, because then you can take advantage of something we call compound interest, where you can
Yeah.
get higher rates of return, way better than 6%. And that will continue to snowball your money year over year so that when you're ready to use it, there's a larger amount available to you.
Yeah, I love that. I mean, I know for so many women I know who just like have their money sitting in a TFSA or even sitting just in their checking account. Like they're just looking at that money every day. They actually do not know what to do with it. And
Yeah. Yeah.
it
And
takes
you
them a
know what?
long
Just
time to get to this location to even have a conversation about what to do with their finances and their dollars.
Yeah, and just to add to that before I forget, because you mentioned TFSA, so many people, Alana, that I come across, women especially, they feel that because they have their money in the TFSA, that's the investment. The TFSA is literally, think of it as a car garage. You can park your money into the garage, aka the TFSA, but unless you actually pick an investment of some sort, whether that be ETFs or stocks or whatever the case may be, the money is just basically going to be sitting in cash. The TFSA is not the investment itself. It's literally what are you holding within the TFSA, the stock that is going to present that high interest rate. So I want people to understand that having a TFSA is the first step, but you have to make sure that money is actually invested in the TFSA to get rates of return.
Yeah, I love that. I have a lot of questions for you, and many of these I think are gonna like help people take pause about how to create wealth for themselves and their family, their children. And there's all sorts of things that I would like to use myself as an example because I'm learning right as I go. I'm in my 40s. I have a bunch of young kids, and there's certain aha moments that I've had with you that I'd love to share. So let's go with our first question, which is why do business owners need to protect their income with disability insurance? What is disability insurance?
Yeah, great question. So, disability insurance essentially is coverage that will pay out a monthly benefit if you are unable to do the duties of your job. So, this doesn't really just apply just to business owners. This also applies to everybody, essentially. But it is really important for business owners to have, small business owners, large business owners, because you are your greatest asset, right? Like, you can have the most amazing job in the world, but if you are somebody that physically needs to be around, physically uses, your arms, your legs, your brain to work, if you are unable to do this job due to an injury or illness, that is severely going to impact the financials of your household or yourself, right? So disability coverage is basically going to give you a payout monthly based on your income. So only a percentage, usually around 60 to maybe tops 80%. But it'll give you some money on a monthly basis so that you are able to pay your bills and maintain your standard of living. Because if you can't work, how are your bills going to be paid? Right. So you want to make sure you have coverage in place where if you are unable to work for whatever reason, due to injury or illness, money's still coming in so that you're able to keep your business running.
What are some of the how does actually disability insurance work? You pay like monthly into some sort of insurance plan, and the idea is then um at any future date, let's just give an example. I buy disability insurance because I am a business owner. We should
Right.
talk about that. Do I have disability insurance?
Not with me. So we need to work
Okay.
on that.
Okay. So we'll talk about disability insurance. Um, so if I were to buy disability insurance, is there different like packages or is there a scale? I guess
Absolutely.
my first question. Okay, go for it.
Absolutely. So First, when we're assessing a client for disability needs, you want to first take a look at what their occupation is, right? Because not everybody is going to be assessed the same way. A teacher, is going to be assessed differently than somebody that's a landscaper or somebody that, works on, building houses or
Right.
roofers, right? So depending on the severity of the job and the risk that's entailed with the job, an
Yeah.
administrative assistant who's at the desk all day, they're going to be much lower risk than somebody who, for example, helps to, do shingles on a roof every day, right? So that's the first step, right? Is assessing, what the job is, what the duties of the job is, and of course, how much annual income is. After we get that information, then we're able to do an assessment of how much the insurance company will insure this person for based on their occupation class, aka their risk. So once we determine how much coverage they can get, so let's just say, for example, you're eligible, Alana, to get $5,000 a month. Then you're going to determine how long you want that coverage to be for. You can get a plan that's for 2 years, for five
Yeah.
years, and some insurance company offer plans up to age 65, which is really something to think about because remember, a disability
Yeah.
itself on average lasts up to 90 days. But what if you get so injured that you can never work again? Then what,
Right.
right? So
Yeah.
having a package that covers you all the way to age 65, it's a long time, but at least that ensures that if you can never work again, this benefit is guaranteed to pay out this, amount on a monthly basis. And back
I
to your
love that.
question about how you pay, you can pay annually or you can pay monthly for this benefit.
Yeah. Interesting. It is something to look at. And I think a lot of people don't necessarily think about these sorts of things. So it's good to bring to light the fact that they're protecting their income. That's literally what it is, right? It's a protection.
It's a protection of your income. Think of yourself as the goose that lays the golden egg. You are the
Yeah.
goose and you want to make sure that you are protected. So, this is something that, yeah, it's not the sexiest topic. However, you want to protect your income. Your income is your biggest driver for most people to work. And
Yeah.
some coverages, especially for business owners, you can insure not even just your income, but your other business expenses too, your rent and different monthly expenses that you have to pay. Maybe, for example, if you have to pay for your podcast studio, different things like that can be added to the plan as well to ensure that not only your personal income is covered, but your business income needs are covered as well. So those are all
Yeah.
things that you would work with your advisor to figure out and come up with a plan that makes sure you're covered 100%.
If I'm a business owner and I have employees, can I extend the business insurance to them? Like, how would they buy into potentially
Yeah, so it can go one of
being
two
protected?
ways. It can
Yeah.
go one of two ways. You are able to offer coverage to your client on an individual basis, but for most employees or employers, should I say, that have, at least five or more employees, you can get a group plan. So group disability is something that we look at more on like a macro level, but we would then assess, of course, the age, the sex, the duties of, the employees, and then we would work with the insurance company to put a plan together to cover everybody.
Okay, good lesson for me. Did not know about any of that. But you and I will talk about that offline. I'm curious to know what I
Definitely.
would definitely get. Okay, uh, let's talk about critical illness insurance. Why women? Why would women need to get critical illness insurance early in life? Maybe explain what it is and why maybe women would need to get it like in their, I guess, like early stages of their living.
Yeah, of course, as early as possible. So essentially, critical illness is going to pay you out a lump sum benefit in the event you are diagnosed with an illness found within the policy. So most insurance policies have up to 22 to 25 illnesses, and these include things like heart attack, cancer, stroke, deafness, blindness, loss of limbs. And essentially, it means that if you are diagnosed and meet the conditions in the policy, they will give you a lump sum benefit. And this benefit will be chosen by you. So, Alana, if you know that you want at least 100K, if anything happens to you health wise, that's the amount you'd apply for. That's the amount that you'd be paying for on a monthly basis. And that's what would be paying out to you if you had to claim. So essentially, it's one big lump sum that gets cuts out to you. They don't care what you do with it. It can be used to pay for treatment. It can be used to pay for hospital parking, which can be very costly. It can be used for, you to renovate your home if you have an illness now where, you need a wheelchair and you need wheelchair accessibility. There's tons of
Yeah.
things, but it's essentially to help you financially in the event that you're ill and you need money. Because what happens is, Alana, a lot of people are under the misconception that OHIP like covers everything for you, and that's not the case. I mean, maybe you can help
Yeah.
attest to this too, that a lot of drugs and things like that are not covered, and what happens is people end up draining whatever savings they have while going through treatment to pay bills and to make sure they have the right amount of coverage. But what does that mean for their finances? That means everything they've worked so hard to build is now depleted, and they're starting from zero or going into serious debt. So this is
Yeah.
where that lump sum will play a huge role. So why you want to get it as early as possible is because things like critical illness insurance, the premiums are predominantly based on your age. So the younger you are, the less expensive it is. So that's factor
Mm.
number one. But number two, the younger you are, typically that's your healthiest time of your life, right? So typically, and not everybody, of course, you can get ill when you're young too. But if you're young and healthy, no issues, no medication, no follow ups for exams, things like that, now is the best time to apply. Because when something happens and all of a sudden you're being investigated for something, this is when you're going to want to run to get this type of coverage, but it's going to be so hard to qualify at that point because
Mm.
now you're like a risk to the insurance company. Well, they're not going to want to take you on if you possibly have breast cancer with a lump in your breast. So you need to get something like this put in place beforehand. You can't wait until you're ill or you're being investigated to try and get this coverage, because even if they do approve you, they might exclude certain things. They might say, okay, we'll cover you, but because you have a cyst on your ovaries, we're going to cut out ovarian cancer. So
Right.
to eliminate all of that, it's always a good time to apply when you're young, healthy, for great premiums and to making sure you get the best plan.
Yeah, I love that. Is this one of those things where I mean, I've done some life insurance stuff before, but is this where they send a nurse to your house and they do like an assessment based on that and make, no, okay, not like that.
No, I mean, in the
Okay.
past, typically, if you're applying for a large amount of coverage, then yes, they do have the right to reserve somebody to come and, maybe draw some blood or check your urine. But honestly, since COVID, a lot of insurance companies have upped their underwriting requirements where,
Mm.
sometimes up to $1 million of coverage, they don't need any medical or anything like that done. So now more than ever is a great time to apply, because compared to like 10 years ago when I first started, there would have been more requirements, but now it's a little bit more carefree.
Okay. So fascinating. Critical illness. I mean, I hear stories all the time of things of people getting critically ill out of nowhere, and there's such tragic stories. And it just insurance, right? Like you just never know. So why not, protect your physical ability to asset, right? Like my actually is a personal story, which I don't share often, is my mom got very disabled midlife when she was 48.
Hmm.
And she lost both of her legs. Both of her limbs were amputated. Um, I don't know what I was 9 years old. So I don't really know what kind of insurance they had. But those are sort of things like out of complete nowhere, she had a heart attack. It resulted in gangrene and she lost both of her limbs with four
Wow.
children at home, being like the person running. She's the golden goose. Like she was laying all the eggs for
Wow.
everybody. So you never really know what you're handed. So to me, this makes me take pause. I have no genetic resemblance to my mother's heart issues or anything like that. I'm completely checked all the time. But I'm 40 and like I couldn't imagine in 8 years from now when I have three still little kids being completely disabled midlife. And it's a really interesting position to have been raised by somebody who's gone through that. And it's not now until motherhood where I'm deep in it, where like I couldn't even imagine like my mother. We don't really talk about that often, but like
Hmm.
she is persevered and wears prosthetics and everything's really, really, really expensive, real expensive. And not everything is covered all the time. So this really does make me take pause and really let's shed a light on the fact that critical illness insurance early in life is a real good idea. Um,
Absolutely.
Anything
Absolutely.
else to
Just
discuss about that? Go ahead.
Yeah, I want to add to that actually, because, a story that I can share too is, back in 2017, I met with a friend that I went to high school with, along with his wife, at a local coffee shop for a meeting. And we discussed life insurance and critical illness. And she said that she wanted to get some critical illness because she had breast cancer history in her family. I think her aunt and, a few other people had it. And she just wanted to get it, just to be sure. So we discussed a policy and we put a policy in place for her. I don't think she would pay more than maybe $25 a month or less for $50,000 in the event she, caught a critical illness. So we put that plan in place. And then lo and behold, it was 2021, I believe, she called me. And, she called me and said that she had stage 4 breast cancer. And I couldn't believe it. I was in shock. Only because as an advisor, that's my job to show people to get these things in place. But it's another thing when someone actually physically calls you and says, like, wow, Nicole, like, I need to make a claim. I have cancer. So it made me feel so good that we met that day and put that plan in place, because now I was able to provide her with a check for $50,000, where now she could use that money to help her pay for any treatment she needed. But more importantly, just rest assured that she doesn't have to go back to work after her chemotherapy session. Like, she said she'd be
Wow.
at chemo, and people would literally have chemotherapy and have to go back to work right after, like within hours of
God.
that, because bills got to be paid, right? So
Yeah.
this is like, a real life experience I want to share with people, that just having that peace of mind where if you have to take some time off of work or whatever the case may be, that lump sum can help, because nothing is worse than going through something so scary like that. And then on top of that, adding a fear of not being able to pay your bills or anything like that,
Yeah.
or putting yourself into major debt. So that's just a real life story that having that in place really, really, really helped her out. And she's fine. She's
What?
alive. Thank
Yeah.
God. But I'm glad we
Yeah.
put that in place.
Well, I mean, Nicole, it just makes me really think about the fact that as women and as moms often, we often treat motherhood like some sort of diagnosis, like in itself, that
Mm-hmm.
we can't take care of ourselves, but we're always busy taking care of everyone else. But by getting this sort of coverage for ourselves and looking really at insurance and all these ways in which you are so unbelievably knowledgeable, specifically for women, it is our little, you said, we are the goose that lays the golden egg, but where's our nest, right? Who's going to catch us? So this allows us to have those opportunities to create those safety nets for ourselves where, there's at least something woven underneath us that if we fall, that not everything falls also.
Yep, because it affects the family, right? No, no matter what, it affects the family majorly if you become diagnosed with an illness. But on top of that, the financial strain that couples endure, single people couples, it really, really, really impacts everything all around. So if that's one less burden for, you as a woman to carry, it's totally, totally, totally worth it. And for many plans, I think a lot of people too, Alana, they just assume these things are super expensive. Like, no, inquire. Like I said, I don't think she paid more than $25 a month for this
Yeah.
policy. And look at that. Within a few years, it gave her 50 grand. So don't think it's super expensive. There's a lot that goes into it, but talk with, an advisor, message me, and I gladly will provide you a quote. No problem.
Yeah. Like literally less for than the cost of a pedicure. You can set
There you
yourself up
go.
with a really, really good situation. Okay. This one really strikes a chord with me. Let's talk about why children need life insurance at an early age. I'd like you to discuss it, then I'm going to share my story. Go ahead, Nicole.
For sure. So, children and life insurance, it's definitely a very taboo topic, especially with moms. Like, I had a meeting with somebody yesterday, and just the thought of that topic like made her like motion to like vomit, because like nobody even wants to utter those words of their children passing. But unfortunately, it can happen to anybody. And it's really important to have, coverage in place for yourself, but your children as well, because once again, the financial impact, for the household with funeral arrangements can be very great, right? And just making sure that there's something in place is one less thing to worry about if something like that were to happen. But the biggest reason that I want moms to look into getting coverage is protecting their children's insurability. And what that means is getting coverage for their child now at age 1, 2, 5, 6, whatever. It's making sure that there's coverage in place so that if their health changes down the road, you have now locked in and have coverage in place for them for the future. Because a lot of people assume that, oh, Nicole, my son or daughter can just get coverage when they're older. They don't need it now. But how do we know that your son or daughter is going to qualify? If they are 11 years old, for example, and they're diagnosed with stage 1 diabetes, that may make them uninsurable. That's a decline for a lot of insurance companies until they reach a certain age. So just for the simple fact that as parents, as much as we want, to wish everything is fantastic, we don't control what's going to happen to our kids' health. And by getting coverage in place, you're protecting that so that you're locking in some coverage. So if anything does change, you have a coverage in place for them. So that's reason number two. And the third reason is the premiums. Life insurance, along with things like critical illness insurance, the premiums are predominantly based on your age. So the younger your child is, the better it is because the premiums are going to cost next to nothing. So by getting coverage in place now, I do coverages for, babies less than, 2 years old, just for the simple fact that the coverage amount will be super small, super affordable. And once again, you've locked in that coverage for your child.
I'm just like making mental notes of all the insurances I need to get as soon as we hang up this podcast. Cause I'm like, every time we do an interview, I'm like, oh God, there's all these things I need to put into place. I mean, look, you're
Right,
speaking to somebody whose kid is critically ill, and I was not expecting ever for my one of my kids to be sick, guys. Like,
right.
let's put it out there. No one's like, oh yeah, like my kid's gonna be an unwell baby. Like I would have never imagined that. And that's my personal experience for me. But I have to also share that my parents were really smart investors and got me and my siblings all life insurance at a very early age. And now that I'm 40 years old, my life insurance policy that my parents bought for me as a kid is extraordinary, like beyond extraordinary. So I feel like they really created that moment of intergenerational wealth simply with a life insurance policy as a kid. Can you talk about that for a minute?
Yeah. So the fourth reason that you also want to get coverage for your child, like Alana mentioned, it's a great wealth building tool. There are different types of life insurance, but there are certain types, such as whole life and universal life, which are amazing to get for your children. Why? It's because they have something called cash value. And cash value is a part of the policy that builds up over time. With a policy, specifically whole life, you can have a policy that gives guaranteed cash value, where essentially they take a small portion of your premium and kind of store it away. And over time, that premium and that cash value itself will grow and snowball. So as your child is growing, that guaranteed cash value is growing too. And what that means is that by the time your child is our age, 30s, 40 years old, there's going to be a significant amount of money in there that you can help put towards your kid's future. So if you want to gift your kid with a down payment for a home, a car, education, whatever the case may be, that's what this money can be used for. And on
Yeah.
top of that, if you never touch that money at all, this is huge, 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 huge wealth transfer, because that means that now this kid that has a policy possibly for up to maybe 500,000, and this now can be passed down to his family, his or her family, when they are older. That is called a wealth transfer strategy, putting something in place now that grows over time that the next generation can benefit from.
So it wasn't until I met Nicole that I actually started asking these questions of my family. And my parents have been paying for these policies for all four adult children now for so long, they didn't even know they were paying for them. And then when it came into perpetuity now, like they're like looking at these things and I cannot believe what they invested in. So they made quite smart investments, many decades ago, which I'm now, Nicole's helping me manage sort of the next stages and iterations of how that will work for me and my family. But what a blessing and what a gift, that my parents
Such a
who
gift.
afforded us this opportunity where I'm now for the first time thinking about in my adulthood, like the insurances and these moments where I can create generational wealth with insurance policies for my kiddos for literally like my parents probably paid less than the cost of a cup of coffee, 30 years ago. And they created those opportunities for us because they got really, really great advice. And I'm really excited that Nicole is obviously, of the same ilk in terms of age and stage in life as me. So
Right.
like for me for financial life advice for from now until forever, I love the fact that I can talk to Nicole about these things because my parents financial advisor and the person who helped them do investment planning is retired, so he's no longer in business. And I was like, I need to find somebody who can help me and guide me that isn't like a middle-aged, a guy in his 80s on the back hole of a golf course. And I don't know his son who took over the business, but I know Nicole. And I came into Nicole um, through somebody else who does like sort of financial investing and life planning and insurance. And I just loved Nicole is so hella smart and she just knows this stuff cold. And the way that you know how to do what you know how to do. If you're, I don't know, a florist and you know how to make an arrangement, or if you're, I don't know, a teacher, you know how to do classroom management. Nicole just knows how to do this stuff. And because she is a mom with a young family, like, I find that you are very like put empathetic, right? You put yourself in the shoes of your customer,
Right.
many of which are young women, and you're able to so clearly say, like, if I were you, this is what I would do. And you're really trying to tee people up for success. And that's why I appreciate these insurance recommendations. So anything else about early child?
Yeah, I mean, like, yeah, you've kind of hit the nail on the head with that. Like I said, it's just so important to get that done. So let me just talk quickly about the ways that you can insure your child. So there
Go
are
for
two
it. Yeah.
ways that you can insure your child. You can add them on to your life insurance policy under a child rider. A child rider is like an attachment that you can add onto your insurance policy, and it'll cover all of your children for one cost up till age 25. So one child rider can cost anywhere from, let's say, 15 to 20 bucks a month extra. And then if you're a mom of four, it's not going to be $20 or whatever times four. It's just one cost will cover all of your kids up to a max of maybe 30 or 50K. You will determine how much you want to apply for. But nonetheless, they'll all have coverage. And when they're older, they can convert their child rider for up to 5 times the amount without any health questions asked. So once again, that's where the insurability protection comes into play. Because if you get this rider on your kids now, and at age 15, all of a sudden they have sickle cell or something like that, then that means that A, you've locked in coverage for them. And B, if they want to turn that policy into their own policy for even more coverage, they can with no health questions asked. Like that is
Incredible.
a game changer. You don't understand how that important that is. I have moms that contact me and say, hey, Nicole, my child has this illness or my daughter has this illness. Can we still get something? And you don't realize the significance of wanting insurance until you're put in a position where you're questioning whether your child can even get it or not, right? Like we just assume that our kid can get it. But once an illness happens, all of a sudden your brain is racing and you're looking to get coverage in place. So once again, I encourage all the listeners that are on the podcast today or even watching on YouTube to be proactive and not so much reactive and wait for something to happen.
Like, wow, wow, wow. Do I have riders for my kids? I need riders.
We
Write
got to
this down.
check.
We need to
I'm
get
writing
riders.
everything down.
Yeah, we gotta get some riders for my kids. I mean, I'm somebody who has been put in critical situations with life and death situations with my children, and like part of this is like, just making sure that we're teed up for success. And I think, the truth is like, even working class people, middle class people, upper class people, people who are living paycheck to paycheck, stay at home moms, like we when we have money, we make a decision of what we prioritize on how to spend it, right? And it could be that pedicure, it could be that cup of coffee every day at $5 at Starbucks that you're spending every single day. Or it could be something that maybe feels ominous and hard to talk about, or feels like that's not my story. That's not me. That's somebody else's reality, not me. And or it's really hard just to look at yourself in the mirror and say, like, this could be me. This could be my kid one day. So it's kind of a challenging piece because people don't want to talk about the hard stuff, right? They don't want
No.
to have to face it. They want to just like put themselves in a bubble where they exclude themselves from the realities of things being really fucking hard.
Yep.
And I've done real fucking hard, and I feel grateful for what I do have in place for what has protected my kids. So, um,
Awesome.
yeah, it's great. Um, let's talk a little bit about why learning to invest is crucial for our financial future.
Yeah, so investing is definitely a sweet spot for me. I have a lot of passion when it comes to teaching women and males too. Don't want to exclude you guys, but teaching people about learning to invest because it's really important to understand how your money can work for you. Being a saver is an excellent start, just learning to save your money. But investing just takes it one step further because, once again, going back to what I said before, you get to take advantage of something called compound interest, which is simply interest on top of interest. It's how your money makes money. And in order for your money to make money, it really should be invested because once again, when you have your money just sitting in a simple savings account, that's great. You know where it is, you can access it. Yes, there's not really any risk involved in regard to losing your money. But I think COVID will teach everybody that inflation is real. We are all seeing the cost of groceries. We are all seeing the cost of, clothes. Everything has like totally, totally, totally increased over the past 2 to 3 years. And we're seeing it with our own eyes. Like a bag of grapes is like 13 to 15 bucks, which is crazy. So that being said, your money needs to keep up. And if you have your money sitting in cash, you're actually losing money because if inflation is 3% a year, and you're not getting anything on your money, then you're actually losing money. Your purchasing power is super small because it can't even keep up with the cost of living. So how do we mitigate that? Mitigating that
Right.
is by investing your money. And I don't, when I say investing, that just sounds so grand. You know, there's different ways to invest for sure. So once again, it all falls back down to your time horizon, aka what are your goals? Is this money you're going to need in the long run in regards to like 10 years plus? Or is this money that you're going to need because you have a down payment in a home owed in like, 6 months? Situations like that, investing is not a good idea because there is a risk that your money could drop, right? Lose value as well. And if you need that money shortly, it's not the best time to put money in the market. But
Yeah.
if you have a longer time horizon where the money's not needed, such as saving for retirement, or if you think saving for a house maybe 5 years out, having your money in any type of investment fund would be a good idea just because you'll get great rates of return depending on where that money is.
Yeah.
And yeah, your money is working for you. So the first step I think that people need to take is just personal research again on the different types of investments. But if you're one of those people like Nicole, you know what? I don't have the capacity. I don't know what's going on. Can you walk me through this? You could definitely call me and book a consultation with me in regards to investing, where I'll walk you through the basics of how to invest. What is a stock? What is the stock market? We'll discuss all of that and find the investment option that works with what you're trying to do. Because not every investment is for everybody. Like it
Yeah.
really is a tailored solution, and it should be tailored. You shouldn't trust anybody that's just trying to put you in any and anything. It doesn't work that way. You want to find someone that actually has your best interest and wants to have your money align with your goals.
It's incredible that you remind me of the early days that I started working with you, which wasn't that long ago, but
Mm-hmm.
I it was you coaching me through those decisions and going line by line about what my options were and really explaining in such like perfectly clear layman terms. I know exactly what I was getting myself into, you know? And I feel like you had an amazing way of just sort of coaching us through this. And you can see Nicole, she's not reading notes. She just knows it. She knows it freaking cold. The products, the numbers, the investments, how to do this. So it's really nice when you can like rely upon a professional to help us manage our wealth or generate wealth for you. And it doesn't matter if you have, no savings or some savings. I do love that. But if you're looking at sort of a long term opportunity, Nicole can totally coach you through those moments, which is incredible. So, if you're not already following Nicole, you have to check her out. It's Advisor on the Go on Instagram. She's dropping gems of genius every single day. This is her area of expertise. And she is just the best at really giving you everyday concrete financial awareness for your family, wealth creation, how to max out your TFSA for 2024, which, she was coaching me on. And she gets it. So I highly suggest that if you're not giving her a follow, to do so. Nicole, is there any other ways that people can contact you besides through Instagram?
Yeah, so Instagram definitely is where you'll see me the most active. I just started a TikTok, not really much followers on there, but you can help me out in that area at
Yeah.
Advisor on the Go as well. But yeah, best way definitely would be Instagram. You can email me at Nicole at cpnfinancial.com. And you can check out my company website as well at www.cpn, as in Cat Peter Nancy, financial.com as well to book a consultation. And there's a link in my bio on my IG where you can book an action call just to kind of figure out, the services I offer and how I'm able to help you. But, I just want to make sure that you guys know that taking action is always the first step. I know that some of these topics might seem very heavy. They might seem like, what, where do I start? And that's where someone like myself can add value because, as Alana said, I'm very easygoing. I really do have a great way of breaking things down and making things very simple for you to understand. And yeah, I feel like once we get in contact with each other, you'll definitely know what needs to be done based on our conversation. So take action. It's the first step. I think a lot of people think that if they research this and research that, they'll get clarity. But one word of advice I have is that clarity comes from taking action. You'll get clarity once you decide to move in the direction that you're supposed to. So take action. And yeah, I look forward to connecting with you guys.
I love that so much. So stop what you're doing, get out of your Amazon cart and whatever you're carting that you don't need, You look around your house and you're like, oh man, like this was not a great spend. This
Yep.
is a great spend. There's absolutely no regrets I've ever had. If life insurance and financial planning and financial literacy, I'm still learning. Every single time I watch Nicole's content on Instagram and every single time we do an interview, I always learn something new. So this woman is just a complete wealth of knowledge, and I play on words like the wealth is in the wealth. I suggest you go give her a follow. And if you are looking for an opportunity to really actually speak about something, if you feel like, we're sort of at that sandwich age where some of our parents, unfortunately, are starting to pass on, and there's wills and estates that are coming up, and maybe there's difficult conversations to be having within family dynamics, or you inherit something, or you win the lottery, or you get a bonus at work and you want to, not put it in some sort of AI online platform where you don't really know what you're looking at. This is
Yep.
somebody who, can really make this happen for you. So, Nicole, thank you so much. My biggest takeaway for today has been just to book a call with you and to find out what insurances I can do that can make sense for our family, for me, for Matt, and for all my kids.
For sure.
To figure out, ask some questions I've never really thought about before. So these are excellent. Nicole, is there any other final remarks you want to share? What's the message that if people hear nothing else, what do you want them to know today?
Oh man, there's too many. I think like just what I said before, like I said, these topics definitely are, like I said, not the sexiest, but they are things that you have to put in place to protect your financial future, right? Like life is always lifing, things are always going to be thrown your way. And I think sometimes we think, oh, I'll do this at this stage or when I'm ready or at this stage, but sometimes you just got to take that leap. You know what I mean? So just know that when it comes to investing, you don't have to have a large amount of money. I have literally have clients that invest 25 bucks a month because that's what they can afford right now and they can increase it at any point in time. So feel free to know that you can start small and work your way up. But once again, taking action is the first step. And yeah, I'd be glad to speak with you guys.
Nicole, you're incredible. Every time I literally talk to you, I learn something new. Please go check her out. We will have all of your contact information in the show notes. And I can't wait to see way more of you this year. So thank you for your time, Nicole.
Yay. Thanks for having me, Alana.
Bye, everybody. Mwah.